My top 5 mortgage myths. We're gonna bust them today. It's Mike Novak from the Novak Real Estate Team, part of Real Brokerage. And I hear more misinformation about mortgages than anything else when it comes to real estate, maybe even more than what's going on in the market. So today I wanna share with you my top 5 mortgage myths and share with you what the actual truth is so you're a more informed and educated buyer when you're ready to think about purchasing a home. The first one, the biggest myth, is that you need 20% down to buy a house. That may have been the standard 25, 30 years ago when our parents were buying houses, but it is by no means the standard today, okay? So you can buy a home for as little as 0 down. I'm gonna share with you 3 ways to do that here in just a minute, but you can buy a home with 3% down, 5% down, 10% down. The only big break you get when you put 20% down is you typically get the best rate, and you also don't have private mortgage insurance. Private mortgage insurance exists on any mortgage typically when you don't have a 20% down payment unless it's a VA loan. So that can amount from $100 a month to $300 or $400 a month. Totally depends on your credit profile, the price of the home and mortgage and everything else like that. But that's just a huge misconception. You should not wait to save 20% to buy a house. If you do that, you likely are gonna end up getting priced out of the market and not be able to afford buying a home. I would rather have you buy a home with 3% down now than buy a home in 10 years with 20% down. You're going to do much better financially by making that purchase as soon as possible and starting to build your appreciation and equity in your house to stop paying somebody else's mortgage, okay? So that's the biggest myth, myth number 1. Myth number 2, you need perfect credit. Again, maybe used to be the case. You used to have like 750 credit to buy a house. Not anymore, guys. You can go all the way down to 620 credit scores and sometimes even a little bit lower. It just depends exactly what your financial profile shows and your credit reports. Talk to a lender though, and know that if you go down to about a 620, you can still probably buy a house. FHA loan programs do allow you to go that low, so do many VA loan programs as well. Conventional might not be an option for you, but it's better than renting a house, okay? So you don't have to have perfect credit. It's okay if you've got some things on your credit. Everyone's got some credit issues in the past. Just embrace those, be honest with them, with the lender, and ask the lender how you can work through them to still get pre-approved. Don't be waiting for your scores to get to 750 buy a house. When you can get pre-approved with a 620, 650, 680, go buy a house. And you're gonna get a great rate still, okay? Number 3, the myth that you need a down payment. This, again, just is not true. I mentioned it briefly on the 20% down, but I wanna cover 3 ways that you can specifically buy a home with 0 money down. You still have closing costs, which are typically 1.5% to 2%. Check out my video about closing costs that I shot. But I wanted to share with you 3 ways to buy with no down payment. The first one is a VA loan, okay? So if you're a veteran, a VA loan is an awesome option for you. You have earned this, you should take full advantage of it. I love VA loans because you have no private mortgage insurance, which I just explained a few minutes ago. So it's gonna save you a couple $100 a month and 0 down, no down payment required. A VA loan is an awesome loan program. Highly recommend using that if you're eligible for it and if you are a veteran. Thank you for your service. Take advantage of that loan program and that benefit that you absolutely earned for protecting our country. The second option, the Down Payment Assistance Program, or the DPA for short. This is a program ran by the state of Washington, the Housing Authority, and it basically gives you a 4% grant for your down payment. But it's not really free money, guys. That 4% down payment actually sits as a second mortgage on title, so you pay it off when you sell your house or you refinance it in the future. The downside to the Down Payment Assistance Program is that interest rate is set by the state of Washington, not by the lender, and it oftentimes can be more expensive than a competitive mortgage rate with another loan program. So down payment assistance is definitely an option for people. Maybe not your best option though if the rates are higher. The third way you can buy a home with 0 down is the USDA program. This is like otherwise known as the Rural Loan Program. So if you're north of Highway 2, east of Highway 9, you can qualify for this program. It's a great loan program. Like I said, 0 down. It's just a great way to buy a house if you're in like Granite Falls, if you're in maybe North Sultan area, Darrington, Arlington, some Marysville. Like there's some great locations you can use the USDA loan program for, and I love this program to buy a house if you qualify for it. There's a couple things that you need to be aware of, like income limits. You also need to be aware of the lower debt to income ratios, but if you qualify for it, it's a great program. I believe it's typically like a 660 to 680 credit score requirement. So you need a little bit better credit than some of the other programs, but it's not like a 700, as of the shooting of this video at least. So those are 3 different ways you can buy with a 0 down loan payment, or 0 down mortgage payment. Down payment, 0 down payment. Number 4, your bank is the best place to get a mortgage. This is a myth I hear all the time, and I could not disagree more with this, okay? Your bank, big banks like Bank of America, BECU, which is local but big. Chase, Wells Fargo, these lending institutions do dozens of things. They do credit cards, they do boat loans, they do business checking accounts, and they just happen to do mortgages as well. They often don't do mortgages very well because they do so many different things. So I don't recommend going to your bank for a mortgage unless there's some really extenuating circumstance. It's going to be harder to get your offer accepted because everyone knows that these big banks often will miss close dates. They're hard to communicate with. You're just kind of a number at this big institution. You call a 1-800 number if you need help instead of a real life person that's an actual loan officer. So I recommend actually working with a local mortgage specific lender that knows your market, that's in your market, has a great reputation as well, and they just do mortgages. They do one thing and they do it exceptionally well. That's what I always recommend to my clients. That brings me to number 5. The 5th biggest myth I hear about mortgages is, gosh, I'm going to use an online lender. Please do not use an online lender like Rocket Mortgage. Quicken is also Rocket Mortgage as well, Quicken Loans. These lenders have a terrible reputation in our market for closing loans on time. If you go to submit an offer, you have to include a pre-approval letter with that offer. If it says Quicken, if it says Rocket Mortgage, you can expect your offer to get a lot of pushback on it. The reputation of your lender absolutely matters when it comes to getting your offer accepted. All of us as agents have seen these online lenders miss closing dates, so the confidence level with them is not very high. And also the pre-approvals are often very shallow. Like they haven't done a lot of vetting of the buyer to make sure this is truly a pre-approved, pre-underwritten buyer. Not in all cases, but in many cases it's been problematic. So you have to get past that stigma of online lenders if you're trying to get an offer accepted. The best way to get past it, use a local mortgage specific lender that's got a great reputation. Reputation matters in the market when you're submitting your offer, okay? Reach out to me for a referral if you've got questions about which lenders to use. We got some awesome lenders that you can partner with that are local here to our area and that just do mortgages. They do them at a super high level. Getting a mortgage, you guys, does not have to be stressful. It does not have to be full of anxiety, but who you work with absolutely does matter.